Schedule D summarizes your capital gains and losses for the year. The profit or loss from selling investments like stocks, bonds, mutual funds, or real estate. It pulls the details from Form 8949 and separates short-term gains on assets held 1 year or less from long-term gains, which usually get a lower tax rate. Enter your name and Social Security number from your Form 1040. For each group of transactions, enter the total proceeds, your cost basis, and the resulting gain or loss. The difference between what you paid and what you sold for is your capital gain or loss. Holding an asset longer than a year before selling generally means a lower tax rate. The schedule nets your short-term and long-term results together. If you have a net loss, you can deduct up to $3,000 against other income and carry the rest forward. Fill yours out free at FormsPal.com. This is general information, not tax advice.